Today we'll see the classification of ratio. Ratio means showing the relationship between two quantity or two amounts, that is called as ratio. In your syllabus, there are classification of ratio is divided into three parts. That is number one, profitability ratio, then turnover ratio, and then financial ratio oblique short term solvency ratio or liquidity ratio. In that profitability ratio, according to your syllabus of BCom third year, the gross profit ratio, net profit ratio, operating ratio, return on capital employed ratio, that is they come under the profitability ratio, then turnover ratio, stock turnover ratio, debtors turnover ratio, creditors turnover ratio, and financial ratio oblique short term solvency ratio or liquid ratio. Under that, current ratio, liquid ratio, proprietary ratio, debt to equity ratio. Let us see the formula of profitability ratio. Before discussing the profitability ratio means profitability ratio is showing the earning capacity of the business. It's called as profitability ratio. Under that, there are first ratio is the gross profit ratio is equal to gross profit divided by net sales into 100. ग्रॉस प्रॉफिट आपको आपके प्रॉब्लम में दिया होता है, दैट इज ग्रॉस प्रॉफिट रेशियो डिवाइडेड इनटू नेट सेल्स इनटू 100, दैट इज द रेशियो ऑफ ग्रॉस प्रॉफिट रेशियो. देन नेट प्रॉफिट रेशियो मीन्स नेट प्रॉफिट divided by net sales into 100. Next, operating ratio is equal to cost of goods sold plus operating expenses divided by net sales into 100. How to calculate cost of goods sold? Is equal to opening stock plus purchases plus direct expenses plus manufacturing expenses minus क्लोजिंग स्टॉक. और दूसरे पद्धति से कैसे निकालते हैं कॉस्ट ऑफ गुड्स सोल्ड डिवाइडेड इनटू नेट सेल्स माइनस ग्रॉस प्रॉफिट. सो हाउ मेनी ऑपरेटिंग एक्सपेंसेस in that giving this notes? Administrative expenses plus selling and distribution expenses. Administrative expenses equal to rent, insurance, office expenses, rates and taxes, audit fees, director fees, legal expenses plus depreciation plus financial expenses. Next, selling and distribution expenses is equal to salary to salesman, advertisement, traveling expenses, RDD, reserve for doubtful debt, discount, carriage outward, free samples, commission to agent, packaging expenses, warehousing expenses. This is the selling and distribution expenses. Next, return on capital employed ratio. Return on capital employed ratio is equal to net profit before interest and tax and dividend divided by capital employed into 100. Capital employed, how to calculate the capital employed? There is a formula that capital employed is equal to total fixed assets plus current assets minus current liability. Or another formula is capital employed is equal to equity share capital plus preference share capital plus reserve and surplus plus long term loan secured unsecured minus non operating assets. Note, fictitious assets are not including capital employed. Next, turnover ratio. Turnover ratio means sales and purchase. How many sales and purchase taken in the 3 months or 2 months? That is showing the turnover ratio. Stock turnover ratio is equal to cost of goods sold divided by average stock. Cost of goods sold, how to calculate, you already mentioned in the in profitability ratio, that is cost of goods sold minus gross profit. Next, average stock is equal to opening stock plus closing stock divided by 2. Note, in absence of information, net credit sales is treated as cost of goods sold. कुछ इंफॉर्मेशन दी नहीं होंगी सेल्स के बारे में, तो नेट क्रेडिट सेल्स ही क्या समझना है, कॉस्ट ऑफ गुड्स सोल्ड समझना है. नेक्स्ट, डेटर्स टर्नओवर रेशो. डेटर्स टर्नओवर रेशो इज इक्वल टू डेटर्स प्लस बिल्स रिसीवेबल divided by net credit sales into 365 days. Next, third, creditors turnover ratio. Creditors plus bills payable divided by credit purchases into 365 days. And last, financial position or short term solvency oblique liquidity ratio. In that, current ratio is equal to current asset divided by current liability. The ideal ratio is 2:1. The current assets are cash in hand, petty cash, closing stock, bills receivable, accrued income, stores and spare part, loose and tools, sundry debtors, prepaid expenses, consignment, loans and advances, cash at bank, short-term investment, marketable security. That is the current asset types. Next, current liability, under that sundry creditors, bills payable, bank overdraft, outstanding expenses, unclaimed dividend, interest due, provision for tax, proposed dividend, RRD, reserve for doubtful debt, plus cash credit. Next ratio, quick oblique liquid oblique asset test ratio is equal to current asset minus in bracket stock plus prepaid expenses divided by current liability minus bank overdraft plus cash credit. Next, proprietary ratio. Proprietary ratio is equal to shareholders fund divided by total tangible asset into 100. Proprietary fund is equal to fixed assets plus current assets minus outsider liability. Next, total tangible asset is equal to fixed assets plus current assets minus fictitious assets. And fictitious asset is equal to patents, trademarks, development fund expenses, preliminary expenses, discount on issue of shares and debentures. And last, debt to equity ratio. The formula is external liability divided by internal liability. External liability is equal to share, sundry creditors, bank loans, outstanding expenses, bank overdraft, provision for tax, debentures, bills payable, advance received income. It is the example of external liability. Internal liabilities are share capital, reserve fund, P&L account, that is credit balance, and dividend. This is your formula of 3, that is ratio analysis, First, profitability ratio, turnover ratio, and financial ratio. These ratio are already sent you in the World Coffee in your Google Classroom. Please refer this, and to tomorrow onwards we'll start our numerical chapter, numerical problems. That is first problem, ratio analysis. Thank you. Thank you.